Welcome to the Titans of Industry show with WealthResearchGroup.com. Today, as precious metals are plummeting in price and testing technical support and testing many people's stomachs, I welcome back Mr. Bob Moriarty. His website is 321gold.com. It's been online for 16 whole years already. Along with his wife Barb, they also launched 321energy.com. And among the many adventures this person has had in his action-packed life, Bob was a Marine pilot in Vietnam, holds many international aviation records. How's life, Bob?
Life is very good. I'm in Europe. The weather is beautiful, and the markets are certainly interesting.
Well, France must be charming, very charming this time of year. I was in Austria last week, and the weather was just phenomenal. I also have a private pilot license just like you do. So I took a two-seater and got to see the Tyrol region and the valleys, the lakes region. Even got to see the famous Eagle's Nest, the giant Hitler compound on the mountaintop on the Austrian-German border. Much like many investors are now breathless. I was breathless with the views, but let's talk about precious metals and why they're plummeting. Important to note that palladium, which is a precious metal, is the best performing commodity of 2017. And another important note is that gold and silver are up for the year, but the shares are looking very bad. How did you get involved originally with commodities and investments?
I actually got involved in gold in 1980. I had seen gold rocket in 1979, 1980. I started buying gold in 1968 when I was in Vietnam because I looked around and said, hey, this is a very expensive war and we're not paying for it. And over the long term, that's probably a very bad thing. Well, it turns out I was right 12 years later. Between the end of November of 1979 until 20th of January of 1980, silver went from $15 to $50, and gold went from $350 to $875. We're in a similar situation now with all the wars the United States has been involved in. The whole world's financial situation is a balloon looking for a pin, and we're in for some interesting times. There will be the greatest transfer of wealth, I think, in world history. And for those who are prepared, it's a wonderful time. And for those who are not prepared, there's some bad times ahead.
Well, looking at commodities, they're down big this year, including the agriculture ones. Sugar is down more than 30%. Oranges, just about 30%. Iron ore down to almost 20%. Coal, oil, everything. Not everything, but many commodities are down big. On the flip side, you've got some commodities that are trending up, like palladium that we said, lean hogs, aluminum, and the big one that's breaking all records is cobalt. And the major news out of Wall Street is that the most profitable commodities trading desk, that of Goldman Sachs, is throwing in the towel. Now, they're closing down their commodities desk. When Merrill Lynch did the same thing in the late 90s, commodities gained 20% a year for 5 straight years. So where are we, in your opinion, in this commodities bear cycle?
You've raised a really good point. You know Rick Rule, you've talked to him before. Rick Rule and I are absolute contrarians. I think being a contrarian is more important than anything. The chart that you're referencing, I know exactly what it is because I just saw it today with sugar down 35%. I make the point in my book that you do not have to understand coal or natural gas or cobalt or palladium or platinum or any of that crap. All you have to understand is human behavior. Now, the only thing that makes any commodity more valuable is inflation. And over time, everything's going to go up for a while and everything's going to go down for a while. But if you short what's gone up the most and go long what's gone down the most. That's a very profitable and a very easy trade. And you don't have to know anything other than human behavior. Now, you're absolutely correct. Commodities are the lowest price they've been in 50 years, and that's not a bad thing. That's an opportunity. We still need coal, we still need natural gas, we still need steel, we still need zinc, palladium, cobalt. We need all that crap. And it's going to go back in the future. It's going to revert to the mean. You should always sell what's expensive and buy what's cheap. And right now, commodities are cheap. Now, you really don't need to know anything more than that. It's that simple. Everybody's in a panic today. Gold's down $10, silver's down 6% overnight. Guys, that's an opportunity. The daily sentiment indicator on gold and silver was 10 on Monday and Tuesday. And when it gets down to 5 or 6 or 7, it's like ringing a bell saying, buy me, buy me. I'm on record. I went on record a month ago saying I thought we were going to see a low in gold and silver at the end of June, early July. We are in early July. I went on record yesterday and said, I think we're at a bottom. The Ridex Precious Metals Fund is more negative now than it was at the low in 2015. And these are all sentiment indicators. Sentiment will be at an extreme for any commodity, either at major tops or major bottoms. So my opinion, it's just an opinion, my opinion is this would be a very good time to be a buyer.
Interesting. So the support the precious metals are having in these levels are, in your opinion, the bottom for the year.
I think so. In December 2016, the sentiment on gold was the lowest it had been in 30 years. These are all indications of bottoms. Now, I don't use technical analysis. I don't even particularly believe in technical analysis, though I know a lot of people do. But you're seeing extremes of emotion. We have a full moon on Sunday, and Tom McClellan points out very interestingly that commodities tend to turn at full moons. They either continue and accelerate or they turn. Now, the choice from here would be, is gold and silver going to accelerate even lower, or is it going to turn? And since we have extremes of emotion and extremes of things like the Ridex Precious Metals, I think it's going to turn.
Well, you pointed out Rick Rule, and I know you just recently told me that the best time to buy gold is when you hate Rick Rule. Look, I wanted to touch on something that I've recently been focusing on, and it's the disparity between the Economic Policy Uncertainty Index, the EPU, and its miscorrelation with the VIX. And on the screen now appears a 20-year chart showing that they really trade differently. And this makes perfect sense. I mean, newsletters and newspapers, the top newspapers in the US, when they publish key terms such as uncertainty or uncertain, coupled with economic or economy, and either Congress, deficit, Federal Reserve, one of these key terms put together, this creates this uncertainty index, the Economic Policy Uncertainty Index, the EPU. And when the LA Times, the Boston Globe, and others focus on these, the VIX rises and vice versa. And you've only seen them decouple in 1998 when the tech bubble emerged. Then you saw the VIX going down while uncertainty was going up. But now you've seen the disparity at its peak. Since 2012, it seems that no amount of uncertainty moves the VIX up. It's like the underpricing of risk has become a madness. How do you explain people since about 2012 decoupling the risk factor from owning stocks? I mean, even people who are talking about debts, they own stocks today. Millennials are getting into options and derivatives. What is going on?
Okay, well, basically, you have to realize people in general are dumber than bricks. Okay, the very best book I've ever read on investing was a book written in 1840 called Extraordinary Popular Delusions and the Madness of Crowds. And when you read the story, you read story after story after story of how stupid people can be. People are stupid, and what you do is you want to capitalize on their stupidity. Now, stocks have gone up since March of 2009 in almost a straight line. So we've had 8+ years of the market going up time after time after time after time. And that is reflected in the VIX. And everybody's saying, well, God, it's gone up, 2009, 2010, 2011, 2012, 2016, now 2017. So it's finally safe for me to get in. And what happens is they do get in. They get in right at the very top. Now, the VIX is a great sentiment indicator because when it's at a low, it's saying we're about to surprise everybody in the market. Now, if you go back to March of 2000, the NASDAQ went up 19 days in a row. And you have to wonder who was the chump who was investing on the 19th day. Believe it, well, gee, it went up 18 days in a row, so it's finally safe to get in. I read a story on the internet about inmates in a jail in Baltimore who were holding stock picking contests. And when you have inmates in a jail in Baltimore holding stock picking contests, you have run out of all possible buyers. Oh, it was hilarious. I mean, it was unbelievable to me. I was reading this. I was going, what? What are they feeding those guys? Are they drinking LSD or something? But I looked at it and said, this is the top. And I was telling everybody I know, hey, this is the top. It doesn't get any dumber than this. And nobody wanted to believe me, of course, but I did the same thing in April of 2011. I said, hey, this is the top in silver. I got more hate mail than I've ever gotten in my life. And of course, all the hate mail told me, well, I nailed that one.
Sure. That's true. It's like when my cousin calls me telling me about gold stocks. I know that I know it's time to get out.
That's 100% true.
When you know my cousin, you know it's 100% true. So Bob, I know you've seen many cycles for the metals. Is this one of the worst?
No, it's one of the best.
Well, you know what I mean.
Well, no, here's the deal. Okay, everything goes through a boom and bust cycle. I went through it. I was buying gold when it was $35 an ounce in 1968, and then I started seeing it go up in November, December, January of 1980. And I looked at it and said, all the guys that I've been trying to convince for years to buy gold and silver, now they're now jumping in. They didn't want to buy silver at $15. They didn't want it at $20. They hated gold at $400, but they love it at $875. Okay, this is the top. We are going to have the biggest bubble in gold and silver in world history. There will come a time to sell. Okay, that's the most important thing. The guys who lost money in 1980 who were not the bears, it was the bulls, because all these guys would not sell. If you got a profit and real estate goes through the roof, sell. If you go out and you buy stocks and they go through the roof, sell. If you go out and buy gold at $1,250 and it goes to $2,000 or $3,000 or $4,000 or whatever silly number you want to pick, sell. Okay? You either invest to make a profit or you invest to make a loss. If you don't sell at a profit, your only other alternative is to sell at a loss. We're going to go through a giant boom. when gold and silver go down like they have overnight, I think it's the most wonderful thing in the world because I know it's an opportunity. I know it's going to wash out all the weak hands, and I know they're going to be giving shares away, and they're going to be giving gold and silver away.
Judging from the traffic to your site, are you noticing what the bullion dealers are telling me, that millennials are just not interested in gold or real assets? They're mostly, paper invested, and they want the most exotic products on the market. They don't want the old wealth, the proven historical wealth.
We were talking about something very similar to that off mic, and I made the point that your biggest competitive advantage is your age. Absolutely correct. In life, you want to be selling what nobody wants, and you want to be selling what everybody wants, and you want to be buying what nobody wants. The millennials have no clue whatsoever as to what a financial disaster the people of my generation have created for them. You cannot borrow your way to prosperity. You cannot spend your way to prosperity. You cannot have interest rates that are negative. We've had the lowest interest rates in 5,000 years. They have never been negative because it doesn't make any economic sense. We have the greatest distortions in history in financial markets, and that's going to end badly for most people. So right now you have the choice between paper assets, which is $580 trillion in derivatives, which is guaranteed to blow up, or T-bonds or T-bills or Spanish bonds or Italian bonds or Russian bonds, or you have the choice of real assets. And I think that having something you could hold in your hand is going to prove to be a lot more valuable than to be holding $1 million T-bill.
Interesting. Are you bullish on any particular metal at the moment? Something that is in particular more exciting to you?
I'm extremely bullish on platinum, and I'm relatively bullish on silver. The highest silver has ever gotten in a ratio to gold is 100 to 1. It did that in 1992, 1993. It got up to 84 to 1 in March of 2016. It actually was at 84 to 1 overnight. Okay, and I'm not sure whether that's going to count over the long term or not, but silver has value, and gold has value, and palladium has value, and platinum has value, but within that space, in relative terms, silver and platinum are very cheap compared to gold, and platinum is very cheap relative to palladium. Everything that's being written about palladium is absolute nonsense. People say, well, you use platinum for diesel cars and palladium for gasoline cars, and that's not true. Platinum makes a far better catalyst, and you require less platinum to make a catalyst than a palladium. Palladium is expensive right now relative to platinum and silver, and gold's expensive right now compared to platinum and silver. And all commodities are cheap relative to all paper assets. So you can make a lot of money buying natural gas, or you could make money buying sugar, or you could make money buying silver. You could make money on buying gold, but you wouldn't make as much money as you would buying silver or platinum.
Sure. I've recently wrote to our readers that the Dow Jones might be headed to 36,000 points in the coming quarters before crashing heavily back down towards today's levels. Charles Nenner, who I interviewed recently, says, however, that we can retrace all the way back to 5,000 points. That's all the way back to like 1998 or something, in which he remarked to me, he said the world wasn't bad in 1998, was it? So what's your view on the Dow Jones and these other major indices right now? Are you seeing them going up into a super bubble before crashing? Do you think they're gonna even crash? What is going on right now with the major indices in your opinion?
Well, let me ask you a question. I happen to have a lot of respect for Charles Nenner For your readers who don't know him, they should look him up. He's one of the most brilliant guys on the web. I mean, just absolutely. I'd love to meet him, love to talk to him. He's a very brilliant guy. Does he believe we're going to go into a super bubble?
Well, he didn't mention a super bubble. What he told me was that he sees a 50 to 75% crash in the major indices. Charles, he doesn't say why, or doesn't say the reasons. He just says, this is what my system tells me, and this is what I'm telling you.
Now, I agree 100% with that, and I'm going to beg to disagree with you. I don't think we're going to go into a super bubble, even though I'll admit it could happen. I think we're in the super bubble right now. At every top in every commodity, everybody has reasons to buy. At every bottom in every commodity, everybody has reasons to sell. So when you've got 100 reasons to buy a commodity, that's the very best reason that you should be selling it. And when you've got 100 reasons to sell a commodity, that's the very best time for you to be buying it. You have to be a contrarian. It is the only thing that works all of the time in every commodity. People are way too bullish. You pointed out, I think very accurately, that the millennials think that the stock market's real. Well, it's gone up for 8 years in a row, and sooner or later it's going to have to go down. When the perma bulls watched gold and silver go up from 1999 until 2011, they just said, it's going to go up every day forever. And that's not true. Every market goes up and every market goes down. And the longer it goes up, the more the odds are that it's going to go down.
Well, I agree with you perfectly. I want to lastly touch on something that is very interesting, and I call it the credit impulse. And it's basically the willingness of central banks to step in and the effectiveness of their intervention. Now, Bank of America published a really good really good publication on this, and they've concluded that credit impulse has peaked, meaning that central banks are not that trigger ready to come in and intervene anymore, because the more they do it, the less it becomes effective, and they don't want to basically discount everything they've done and make it appear as if it was nothing. They want to have some sort of a trustworthiness and credibility going forward, and that's why they're becoming the opposite of trigger ready. Now they're talking about raising rates. They are raising rates. They're talking about shrinking their balance sheets, and they conclude at Bank of America that this is super bearish, because not having that buyer of last resort changes the way that investors feel about what's expensive and what's risky. If you know that the central banks are not going to come in and rescue you, you make different decisions. Your thoughts on this, on credit impulse, and how it pertains to today?
I think that the central banks are very similar to college kids at spring break. They get absurdly drunk, commode-hugging drunk. They do incredibly stupid things, and at the same time, they think they're the smartest people in the universe. The financial disaster that is coming is not in spite of the central banks, it's because of the central banks. The very concept that you can run a financial economy the size of the world's economy and control it by bureaucrats. These guys are just totally out of control and totally out of touch with everything. They have a tiger by the tail. They've got these balance sheets that are unsustainable, and sooner or later they have to do something. And when they start shrinking the balance sheets, the whole system comes unglued. Now, anybody that passed Economics 101 knows the financial system's unsustainable. So it really doesn't make any difference whether they do it deliberately or whether they do it inadvertently. The system's going to blow sky high, And it's going to be a shock to the central bankers because they actually believe that what they're doing makes sense. Janet Yellen came out with the most incredible statement saying the other day, saying, I don't think there'll be a crash in my lifetime. Now, unless she's planning on going out and running in front of a subway train tomorrow, it can't happen. We're going to have a crash, period. Everybody who passed economics understands that. We're in Never Land. We're in a place the world has never been before, with derivatives that are out of control, with the government. I mean, don't even get me started on Trump and the Democrats and Putin. My God, the world has gone insane. My belief is that it's all related to the gold standard. When you get off a gold standard, you no longer have any sense of value. And we have so little sense of value now. We're talking about, let's go bomb North Korea. Excuse me, guys, why would we do that? We've lost every war we fought since 1945. We want to go start another war against a madman who's nuclear armed? What am I missing?
Well, Bob, can you tell people a little bit about the website and what they can find there? I personally just love the website myself, but could you plug people in?
Yeah, we got two websites, 321 Gold and 321 Energy. I set the 321 Gold up a little over 16 years ago. The purpose of the website is not to cater to investors' fantasies. The purpose of the website is to offer reasonable views on everything politically and economically with a bias towards natural resources. I think there's tremendous opportunity there. We cater to the best investors and the most serious investors. And you're never going to hear conspiracy. You're never going to hear manipulation because, frankly, I don't believe in them. I think they're absolutely meaningless. Now, I did write a book called Nobody Knows Anything that I came out with a year ago. It's very well received. And many of the things that we've talked about, I cover in the book. We're at a very dangerous time, but if investors will take the time to educate themselves, there's some great writers out there. There's some great thinkers. You and I had a conversation off mic. You just came up with an article that I think is absolutely brilliant, that I think every investor should read. There's a ton of bad information on the web, but there's a few pounds of very good information on the web. And we try to make our contribution to the total amount of good knowledge. And I think we've done it. We've had 250 or 260 writers, and we've got a point of view that you're really not going to get anywhere else.
Bob Moriarty, first of all, thank you very much for the compliment, and thank you for taking the time, and we'll see you soon, sir.
Very good, and have a good vacation, and give your little rugrat a hug for me.
Thank you very much, Bob.
Thanks. Have a good weekend.